All right, everyone, here we are with ticker symbol SPX, the S&P 500 index, and how we're going to talk about what's been going on with the recent pumps and when is the next pump and what to expect on a hypothetical scenario, whether each way it goes depending what happens on Monday and what's going to possibly happen on Tuesday due to the reaction of the markets. You want to pay very close attention to how it's acting, and we're going to look at some previous scenarios as well, like last week, so that you can have an idea. And I have been announcing this type of video and this series at the end of most of my videos, so welcome to all the first time viewers and investors to my channel, and welcome to all the first time viewers coming across this type of video that I've been talking about, which is going to help you tremendously in the next coming weeks and months for as long as these Federal Reserve pumps continue to happen. Where you see these circles, I'm talking about the different times and how much it rose from one day to the day of the pump and so forth, and how it's been reacting. So it had been pretty weak in the last 3 times, and this most recent one, it has been phenomenal here. We're going to look at it real closely in just a moment, and then we're going to talk about what to expect this upcoming week and when is the next pump. And to all my subscribers, welcome back. Welcome back. Let's jump into this chart. So the most recent pump was from the 19th onto the 20th. So it was on the 20th. But I like to show from the 19th to the 20th because this is the last candlestick of the 19th and this is the first candlestick of the 20th. And when the 20th started, it started right here at 34.30 and it rose up all the way to 34.77, almost a whole entire $50 jump. Now, it actually jumped 47 points and individual ticker symbols jumped up with it. Obviously, right after, there was some sell-off and so forth. But on the 21st, it was still hanging out and it brought itself back up, leveling off, and it started to dip and so forth. So it actually rose those 47 points within the 20th. And the 20th was the date of the pump. We're going to look here at when was the previous pump, and we're going to look at what's our next pump. So our previous pump was right here on the 20th. You can see it clearly here, and it happened, and we're here on a scheduled time frame from the 15th that it actually was announced. The first one was coming up on the 20th, and this is going to last until November 13th. So we're going to want to pay close attention to how it plays out these next coming weeks and how these pumps are affecting the market. Now the next one is this Tuesday on the 27th. Today is the 24th. The Friday already happened. We're in the middle of the weekend, and we're going to want to see what's going to happen Monday. We're going to look at how it acted Monday before the 20th last week and how it's going to act this week, right? Possibly. And then we're going to look at what's possibly going to happen on Tuesday. So keep these days in mind. So last Monday, which was the beginning of the 19th, it was right here. It dipped. It stated if it dipped, it would bring itself back up and level off somewhere close to it or halfway to it to stop it from hitting newer lows. And that's exactly what it did. It leveled it off, and then it started dipping, and then it's kept, obviously, the S&P 500 in a sideways movement. So if it wasn't for these pumps, hypothetically speaking, if you remove this, you remove this slight green, and you remove this slight green, right? And let me move those circles so you can kind of see it a little bit more clearly. This would actually be on its way down to this point. It'd be somewhere like around here, due to the fact that that pump didn't happen. Because that pump, if you look at the length of it, it's probably almost half of this, and then those little green moments are almost down here. So this is where possibly the S&P 500 would be sitting if these pumps didn't happen. So these pumps don't always just mean that the market's going upwards, right? It doesn't always mean that. What it means is that it stops it from falling any harder, creates some type of attractiveness to the market, and then makes more investors come in. So that's what happens. So on the date of the pump, if you look closely at this whole entire week, the date of the pump is the largest amount of rising, right? It rose up to a certain amount. Now, we're going to look here, and we're going to move this over slightly so we can kind of draw here and see what to possibly expect. So we have Monday with the uncertainty. This is already rising up, right? It's already rising up in this direction. Now, what's going to happen Monday? There's two possibilities. This actually continues to rise up and level off, right? This is what's going to possibly happen Monday. And on Tuesday, the pumps are going to bring it up to a newer high. That's possibly what's going to happen. Now, quickly after that newer high, there will be a slight dip. And that's what exactly we saw here happen on that time. The last pump before that, it quickly dipped in the last 2 days. The last pump before that, it quickly dipped. The last pump before that, though, since it was actually on its way down, this pump stopped it from hitting newer lows and getting down here. The next day, it actually rose up. So there's different reactions according to how the pumps are played out. But when you look at this one, it slightly dipped before, and then the next day it fell. This one ran up and it quickly fell. So most of the time it happens to do it this way, right? That's what I'm noticing. And you have to do your due diligence. You have to do your research. You need to look at the charts yourselves. I'm just kind of here to break it down real quick, tell you guys the possibility of what might happen and what's going to happen according to how the chart is already looking. So we're seeing that here. It possibly could rise up, level off, and Tuesday rise it up, right? Or it's going to rise up a tad bit and it's going to start to fall and level off. Now, that's the other possibility. Now, since it falls a little bit before where it started, then on Tuesday, this pump is going to bring it up and level it off to the point where it'll either break even or try to reach again where it was, or actually surpass it tad bit so that it brings itself up to a newer high to attract more investors and keep the market from going in this direction. That's what this is all about. It's about leveling it off in a higher position than it was before, or stopping it from falling any harder. So those are the two scenarios that usually happen. It's either way how it goes. So you want to pay very close attention to Monday. I had stated last week, if this would start to fall, pay very close attention to the lows. And then obviously after it fell, there would be a spike up, and there it is. It went up, and it went up almost 50 points. So individual ticker symbols went up anywhere from 30 cents to $3 or maybe even more. I mean, there's plenty of ticker symbols to choose from. You'll have to see yourself which ones you feel more comfortable with. Like I always say, I'm not here to tell you to buy, sell, or hold anything. We're just going to have to see how it plays out. Monday is very important. It might dip, level off, and bring itself back up to kind of even out or break above it a little bit to a newer high. Or Monday will actually continue this momentum, bring itself up, level off, and Tuesday will get to a newer high. And then quickly after that, you need to pay close attention, because sometimes it levels off and then it dips, or it actually continues this run and then it does a hard fall, and then when it levels off, you're in that sideways movement that you kind of ended up in the same direction towards the end of the week. So you got to ride these waves accordingly, and you need to pay close attention to what's going on the whole entire overall market. You can also use the NASDAQ and the Dow as a point of reference, but I like the S&P 500 index because it's the top 500 companies of America. I'm not saying that they're more stable, but they tend to have the tendency of more investors staying in rather than just jumping out and moving with hype. These are blue chip stocks most likely as well. And some of them are the largest market cap companies that are in there, and also companies that are well known. So I like that, the S&P 500, for that reason. But you can look at all the different sectors to have an overall view of what's going on in which direction and which side of the market. But the S&P 500, my best advice to make it simple is grab the chart of the S&P 500 index, grab the chart of the individual ticker symbol that you want to look at, and see how it's reacting on the same dates. I advise you to look at my previous videos so that you can see the pump dates of the previous videos and the previous dates. I have them circled here, but that would be too much for us to go ahead and look at all of them. So just check out my previous videos. You'll be able to see those dates, and like that you'll have several dates to compare and see the patterns, and you may catch on to a company that's been riding this correctly almost to the T. I mean, obviously it won't be exact, but you'll find some ticker symbols out there that are moving very closely in correlation to what's going on with the S&P 500 and on these dates. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell so that you don't miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. At the end of this video, there's going to be a pop-up video. It's going to be about the best stocks to buy and is it too late to buy them in 2020. Well, to be honest with you and quite frank, a lot of those stocks are actually stocks that may have growth potential even beyond 2020. So is it too late? I wouldn't say it's too late or it's too early or it's not the right time. I would say do your due diligence, do your research, but check out the video so that you can start seeing all the stocks that are actually going to continue to grow. They've shown growth potential for the last decade or last years, or even some of them have grown tremendously in the last couple of months. You want to look at it closely because day trading or swing trading or, doing the plays by earnings and doing the plays by, I new IPOs and all these different little growth stocks or playing it out because of the whole entire way the market's shifting. Those are all great, but these videos, I'm going to continue to add to them. So you don't have to watch all of it at once. I mean, it's going to be a whole list, but it is very informative and they're a little bit longer because I go into more detail. I talk about their income statements. I talk about their growth potential. I talk about how they've grown to where they're at and also the logical and common sense behind why is it growing and what's going on. So I do a little bit more in-depth research and I'm going to continue that series, but I highly recommend watching them as much as you can due to the fact that you can start building a portfolio, and that's my best advice to everyone that's watching those videos. Pick out a different stock. It doesn't have to be all of them, but you might want to consider checking them out. I'm not there to tell you to buy, sell, or hold anything again, but it's very important to have your portfolio growing as well, not just your plays where you're doing these swing trades and these scalping and these options and puts and also day trades. You're doing all these different things to make money now, but you also want to build value in your portfolio because as an investor, it's good to become profitable. It's good to do all those plays to make some instant gratification, which is what the market isn't really about, but we all like it because it tends to happen when you play it right and you play it strategically. But it's also important to have a portfolio. That's one of the most important things because that's what's going to continue to make you a better investor and continue to hold up your portfolio of your whole account in the long run. Because these swing trades and day trades, they can kind of eat away your profits depending how you play them and depending what plays you're doing. And if they're not eating away your profits, that's really good. Congratulations to you. But you need to be careful because there are going to be moments where things will get very rocky. And then what do? Like, how do you grow, or how do you make yourself an investor for that week? Well, if you have a portfolio, even if the market's moving up and down, overall, if you're in the right places and you're making a portfolio with strong companies that have proven themselves and will continue to innovate and prove themselves, then you'll have something keeping you up from actually being in the negative for those weeks and those moments. So it's super important. I highly recommend checking it out. Again, I'm not there to tell you to buy, sell, or hold anything. It's just information, and I'm going to continue to add to that series. So I look forward to adding them, and also in the long run, I'm going to redo videos on these like 6 months or a year from now, talking about those plays, what I said about them, and where they are 6 months to a year from now. So stay tuned for those as well. Thank you guys so much for watching. The video should be popping up soon. Click on it and let's make some money.